What's going on, everybody? Crypto Headquarters here, and today I want to bring you guys a bit of a shorter video where I cover two news stories within cryptocurrency. The first news story I'm going to be covering involves Bank of America and why they're scared of cryptocurrency and why their failure to adapt could cause them major problems in the future. And the second just being a lighthearted post over on the SEC's website regarding cryptocurrency that I thought would be interesting to cover. I'm going to start out with a disclaimer that says none of the information in this video is investment or financial advice. It's just simply my personal opinion. Please do your own research for investing. Invest at your own risk. Don't invest any more than you can afford to lose, and consult a financial advisor if necessary. With that said, let's get right into the video. One thing I want to do in today's video is I do want to go over the current market. Because today's video is going to be focused on news stories and things like that, I do kind of want to give a market analysis in addition to that. So Bitcoin has come back under $11,000. Honestly, I was hoping that Bitcoin could continue its upward trend past 11,000, but at least we're holding above 10, which is kind of a big number and a huge psychological barrier that was good to cross in the past. Ethereum again below $900. The target for Ethereum right now, in my opinion, is that $1,000 mark. So that is the next stop for Ethereum. So right now might be a potential buying opportunity for that if you guys are looking for Ethereum. Again, that's not investment or financial advice. Ripple down to $1. We're gonna hold above that. Next stop, like I said in other videos, $1.50. And if I kind of scroll down here, we're gonna see that while a lot of cryptocurrencies are up, this is after a day where we had a lot of lows the other day. So another cryptocurrency that is up 57% is Nano. So Nano is previously known as Roblox, and Roblox, if we look at the beginning of January, was up to $32, $33, kind of around at its all-time high. And then for a few weeks, we saw just, $8 to $10 at its consolidation point. And then today, we got a not an all-time high, but a recent high of $16.23. So obviously a lot of news regarding Nano after its recent rebranding, not known as Roblox anymore, or XRB. So obviously a lot of information there, a lot of news coming out for the Nano team. If I just keep scrolling down, some other things that point out to me in today's market: Dragon Chain again rebounded up 15%, up to that $1.52 mark. Cryptocurrency I've made a few videos on in this channel, and if I go down all the way kind of to the end of the top 100, I've noticed Vertcoin has entered the top 100 yet again in terms of overall market cap. Additionally, Enigma I think could be potentially a good buying opportunity, and Request Network picked up some steam again, so it did not fall out of the top 100, so that's good to see. That's going to pretty much do it for my kind of market analysis and what I'm seeing here today. I do think that in the next few weeks, like I said in another video, the spring is going to be very, very kind to cryptocurrencies. I think we're going to see another slight bull run, if not into a snowball into a major bull run going into the summer. But then again, I think that this is the time to buy cryptocurrencies, not investment or financial advice. But if you guys are looking for them, this could be, I think, the end of a long time of suffering for a lot of crypto investors in the space here. So that's just kind of my market analysis. Hopefully you guys find some value in that. Obviously it wasn't in depth and I'm just kind of scrolling through CoinMarketCap and giving my opinions on things, but I do think we are going to see not only a successful future for cryptocurrencies and blockchain, but a very, very promising spring. So with that said, I want to jump into the articles in this video. What's going on with Bank of America? Why is Bank of America scared of cryptocurrency, and why is their inability to adapt potentially an Achilles heel going into the future? Well, I'm going to be using an article over on Cointelegraph today written by William Suberg, and I'm going to be posting this article's link in the description of this video, so please check this out as it's a great article to check out and read in regards to cryptocurrency. But Bank of America has admitted to U.S. regulators that may be unable to compete with the growing use of cryptocurrency. This is something that investors and people who have looked at cryptocurrency for a while have already seen coming. Obviously, there is a lot of use within blockchain and a lot of cryptocurrencies, coins, and tokens that do want to take advantage and disrupt the financial industry as we know it using blockchain technology. In its annual report to the Security Exchange, or the SEC, this week filed February 22nd, the major U.S. bank for the first time highlights cryptocurrency as an area that may cause it substantial expenditure as it tries to remain competitive. So right now, Bank of America is really getting serious in regards to how it's going to move forward with cryptocurrency, because they do understand not adapting is going to eventually lead to death of their company, or at least that's what they're kind of saying here. So our ability to adapt our products and services to evolving industry standards and consumer preferences could harm our business. So they do see the potential of cryptocurrency and how if they don't join cryptocurrency, it's going to lead lead to a future that they are not okay with. As banks worldwide eye the cryptocurrency phenomenon, direct interaction remains low. The lack of uptake formed a central reason why the European Central Bank confirmed it had opted for a hands-off approach to legislating the area early this month. While Bank of America has sought to innovate in the sphere, receiving a patent for its proposed cryptocurrency exchange system in December 2017, it has come in for criticism more recently after blocking its clients' credit card purchases from cryptocurrency. So if you guys have an account over on Coinbase.com, you guys probably know, or any other exchange that does fiat deposits, credit cards are not allowed, at least if you have the Bank of America as your credit card provider. So this angered a lot of people within cryptocurrencies. That's how they bought cryptocurrency, at least for their first fiat to Bitcoin pairings. But what are you going to do about that? But if you look at Bank of America and what they're at least looking to do within cryptocurrency, they are actually have filed for a patent in December of 2017 for an exchange system. So it's going to be interesting how specifically they go into that and how they work their cryptocurrency exchange, or at least the patent for that in the future. There's not a lot of news regarding that, but Bank of America is one of the first banks to really take some grab some initial footing within cryptocurrency. So it's good to see that at least one bank will survive here, as I'm making a joke, obviously. But, it is interesting just to see how banks are going to approach this, because like I said earlier in, this section of the video, there are a lot of cryptocurrencies that literally their sole purpose is to disrupt the financial and banking industry. So Bank of America isn't going to sit around and let that happen. They have done a lot of things, first being a patent, as well as just, saying to the SEC that cryptocurrency is a potential threat, and it is going to be a potential substantial expenditure in the future if it remains to be competitive. Additionally, they say the SEC continues their report to them, says that the competitive landscape may be impacted by the growth of non-depository institutions that offer products that were traditionally banking products, as well as new innovative products, BOA forecast. The report continues to say something very interesting. This can reduce our net interest margin and revenues from our fee-based products and services. In addition, the widespread adoption of new technologies, including internet services, cryptocurrencies, and payment systems, could require substantial expenditures to modify or adapt our existing products and services. So basically, they understand where cryptocurrency is going to hurt them in the future, and they do say that, for them to update their system, for them to, change everything so that can remain competitive with blockchain technology, it's going to cost them a lot of money. But you have to say, at the end of the day, is this amount of money they're going to put towards cryptocurrency going to be worth it? Is cryptocurrency going to even survive till tomorrow? Nobody knows those questions, but Bank of America seems to think it does, and Bank of America seems to think that blockchain and cryptocurrency is the future. So interesting to see how they're approaching that. Next, I want to talk about another article over on Cointelegraph.com by Molly Jane Zuckerman, SEC Director of Investor Education. Don't flip a coin over crypto investments. So this again will be linked in the description of this video, just like everything that I talk about that you guys see on your screen today. So titled the SEC Director of Investor Education, don't flip a coin over crypto investments. Well, this is just kind of a playful jab at cryptocurrency investors, because according to Shock's post, one senior citizen approached her after a lecture asking the question, "My children keep telling me I need to hurry up and invest in Bitcoin. Is it safe? Have I already missed the boat?" So if you guys can imagine a senior citizen walking up to somebody saying that, obviously this is the definition of the people that the SEC wants to keep safe in regards to investing and keeping consumers safe, because, the senior citizen that asked this question probably knew very little or anything at all about cryptocurrency, but their children say, hey, this is the next big thing, you need to invest in it. So this is kind of funny, because Lori Schock is the director of the SEC's Office of Investor Education and Advocacy, and she specifically wrote an informal post at the everyday retail crypto investor, beginning with an anecdote from a visit to the retirement home where she spoke with senior citizens about investing, and this is where she got that quote. So Schock's light tone post comes after a number of more serious statements from the SEC's official website over the past year regarding the risks around initial coin offerings and ICOs, which the United States and the SEC absolutely hates, detailing testimony on the roles of the SEC and Commodity Futures Trading Commissions, the CFTC, regarding virtual currencies. So the SEC Investor.gov post explicitly says Schock's next post is not investment advice on cryptocurrencies, but advice for those considering beginning an investment in the crypto market. As we've seen in the past few months, there has been a recent uptick in SEC activity and CFTC activity regarding cryptocurrency and regulating those investments. We've seen a Senate meeting in which they sat down people from multiple agencies and they talked about how they're going to go about regulating cryptocurrency in the future. The bullish news involved the fact that there won't be a banning of cryptocurrency and the fact that the people sitting down and talking from these government agencies, including the leaders of the SEC and the CFTC, really knew what they were talking about. And it sounded like the future for cryptocurrency, while there was certain to be regulation and there was no set date, it looked to be more positive than negative. Additionally, shock underlines the start of from the start of how crypto investments do not fall under the SEC security protection law, suggesting readers look at SEC Chairman Jay Clayton's December 2017 statement on cryptos and ICOs for more information. There's a quote that says, "You should understand if you lose money, there's a real chance the SEC and other regulators won't be able to help you recover your investment, even in cases of fraud." She then warns investors to not fall for high-pressure sales tactics or listen to celebrity endorsements as your basis for an investment decision. Just because your favorite celebrity or YouTuber says a product or service is a good investment doesn't mean it is. So this is why I am so adamant on the fact that, you guys watch my videos and you guys find value in my opinion, but please do your own research. And, we've seen so many cases on YouTube alone with YouTubers showing specific coins or, lending platforms. I'm not going to mention any here, but you guys can fill in the blanks. And, there have been some devastating outcomes to those, as at the end of the day, people really didn't do their own research on these platforms or cryptocurrencies. They just listened to their favorite YouTubers or celebrities or whoever was promoting these products. So, again, this channel, while I do offer my opinions, this is just another reason why I always say, what I say, take it with a grain of salt, because this is just my opinion and there are so many different perspectives on things. And I'm kind of rambling and I say this so much and you guys are tired of hearing it. I know you guys are, but I really do want to make that, a continued point to continue to strive for saying on this channel. So she recommends not putting in more money than you are willing to lose and diversifying your investments to spread the risks. Well, gee, thanks. So that's going to do it for the news articles that I'm going to talk about in today's video. Hopefully you guys found some value in those and hopefully you guys learned something from this. That's going to do it for the video today, guys. Make sure to hit that like and subscribe button. Today's video is a lot shorter as I do have a lot going on in my life right now, and I do want to continue to upload every day for you guys, even if that means just me covering 2 different news stories regarding cryptocurrencies and giving a bit of a market analysis. So tomorrow, hopefully, I can be back with my regular scheduled content that involves me diving into different cryptocurrencies, giving some predictions on the market, as well as just covering some specific things going on. The regular content you guys see on this channel. But with that said, I'm going to go into the disclaimer that says none of the information in this video is investment or financial advice. This is just simply my personal opinion. Please do your own research before investing. Invest at your own risk. Don't invest more than you can afford to lose, and consult a financial advisor if necessary. I do realize for transparency purposes, I talked about a few cryptocurrencies at the beginning of the video, and I'm going to replay the tape, and in the description of this video, I will let you guys know what cryptocurrencies I am and am not invested in, because I did talk about quite a few of them when I just looked at the market. So that's what I'm going to do for transparency in this video. So that will be in the description of this video towards the bottom, where I cover what I am and am not invested in. But that's going to do it for the video. Make sure to hit that like and subscribe button. Hopefully you guys enjoyed it and have a great day.